So a new survey just came out from Economist saying, hey, this is where we think interest rates are going, what the Fed's thinking, and what we should be looking at. And I want to share the results. I think it's really interesting. Take a look at this. So this is from Financial Times and University of Chicago Booth School of Business. And this is essentially a lot of questions sort of like, hey, what's going to happen in the future? So question number one, what is your prediction of real GDP growth in the U.S. economy from quarter 2022 Q4 and to 2023 Q4? So people are saying, okay, we're looking at maybe 2% growth, right? Other people are saying the high could be 2.5% growth, and then the lower end 1.3, and that's GDP. And then the next one is, what is your prediction for the December 23 U.S. unemployment rate? So the median projections are 4% unemployment. The upper end would be 4.2, lower would be 3.6. So this is stuff that we're all tracking together. And it's good to look at this data so we can get a sense. What is your estimate of the core PCE inflation rate in a 12-month period ending December 2023? So where's inflation going to be? Estimates are 3.8 is the median, 4.1 is the high, 3.3 is the low. And remember, the Fed is trying to get to a 2% inflation rate at the PCE. And the estimates by this December not going to cut it. So we're probably going into next year not going to cut it in both not making your goal and also probably not cutting interest rates. Here's another one. What is your estimate of the likelihood that the core PCE inflation will exceed 3% per annum, right, in the year ending December 2024, right? So basically, this is going into next year. And we're saying about as likely as not, a 50-50 chance is kind of the big one. So remember, we're trying to get the 2%, and basically there's kind of saying here, we may not even get there in 2024 to the target goal of inflation. Here's another one. Suppose that inflation falls sustainably to around 2%, okay? In this scenario, how likely do you think it is that the unemployment rate will not exceed 5%? So this starts to give you a sense of like, okay, these are the key numbers. Is unemployment above or below 5%, right? And is inflation at our 2% target? The largest or most popular answer, I should say, would be somewhat likely. And then is 50-50 would be 25% says about as likely as not. So we're still in the 50-50 range. When I see a lot of these results, I'm just thinking, we're probably looking at, 2025, this kind of things. And when you look at much of what Wall Street tells you, they honestly don't want to tell you the truth because, their goal is to sell you financial products and these kind of things. And, whereas academics, which is this comes from, and these are professors from North America, but Canada and the US from all the top universities, they just want to try to be as accurate as possible. At least let's hope so. And again, this is just giving you a general sense of like, okay, at least let's get a ballpark range of what we should be looking at. Here's another one. What do you expect the peak level for the Fed's target for federal funds rate to be in the current tightening cycle, meaning that how high could rates go? So 48% say, okay, between 5.5 to 5.75. And then you have 35% of the people respondents saying 5.75 to 6. And then you have just a few saying above 6. Now, I don't think it's impossible that we go above 6. I mean, you can't predict the future. No one can 100. But, this gives you a general sense of what we're looking at, right? Again, unemployment, inflation, and also where should we put interest rates. Now, here's an interesting one. Which of the following is the biggest, right? The biggest risk to headline inflation in the next 4 quarters? So I talk about this a lot on this channel, and so I'm not crazy when I tell you guys this stuff. Restriction of oil supply, that was the number one answer. And then number 2, which you also talk about on this channel quite a bit, continued wage growth resulting from labor shortages. And so that's why I've been talking to you guys about the UWA stuff, the strikes and these kind of things, because it's going to be tough to beat inflation. 2 problems, right? One would be Russia cuts oil production, right? We've talked about that several times. Saudi Arabia cuts oil production, etc. And then if workers keep asking for more money because like gasoline costs more because oil has been cut. Do you guys see the problem with this? Bad monetary policy, bad fiscal policy. This is sort of minor for them. Decoupling from China, which is quite interesting. So that this is also, I won't say minor. That's a bad way to phrase it. I take that back. We'll just say oil's the biggest, because they phrase the question as what's the biggest risk. So this isn't really a ranking one. So I take that back. I won't say minor, because it is certainly true that if the Fed screws up, they could screw up everything. But oil is something that we really can't control. And that's something that they think is the biggest risk. So I have to, mark my words with stuff, and I want to be measured, but I like to show you guys these things as what we're looking at. What's interesting though is that the invasion of Ukraine isn't here, although some people did write that particularly down there. It wasn't like one of the questions, but someone did write that a few times. What is the current estimate of the neutral real funds rate? So kind of like, okay, if the Fed is not accommodative, the Fed's not restrictive, like where would a neutral rate be? Like where would we want it to be? And kind of the most popular answer was 1.5, but the range is between 5 and 0.5. And if you want to take just kind of the median range, you would say, okay, maybe when interest rates will go, 2.5 to 1, something like that would be more neutral. Coming into, how about this one? How has your estimate changed since before the pandemic? Some people say little change, and some people say has risen by more than 0.5%. Now, the reason why I think this is important to look at this kind of thing is because, regardless of, what happens in the next couple of years, these things always go in cycles. Like you can't have free money and zero interest rate forever, right? And not expect to have repercussions, right? It's just part of the economic cycle. So it's actually quite interesting when you ask that question, like, hey, looking at your thoughts before the pandemic and after, how things change. And it's not like drastic. I thought that was really interesting. Little has changed with 36%, and then maybe not more than 1% of the 36. So it's an interesting question to ask. Here's another one. When do you think the Fed is most likely to start slowing the pace of quantitative tightening, right? So when are we going to not be printing but sucking money out of the system? So 2024, the end of next year, quarter 3 or quarter 4, that's the largest response. And then the second biggest one is 2024, quarter 1, quarter 2. So, we'll see if indeed that we sort of maintain the sort of tightening policy up and through next year. So my personal opinion is, literally the Fed spells it out for you, is that we're going to take it, day by day, we're data dependent, these kind of things. But it doesn't seem like they're in any hurry to be cutting or anything like that. And even if they do cut, that would probably mean that they see something really bad in the economy and hey, we need to spur growth because we're not growing anymore. So it doesn't seem like that we're going to be hitting that scenario. And this is where I don't necessarily trust what Wall Street says and those kind of things, because I think they're always looking for the rosiest path. And honestly, guys, I think regular people are still struggling, and inflation, we got to get it under control. You know this. You can't have prices go up forever. And this is a really difficult thing to control, because then workers want to get paid more and the cycle keeps going. What's more, when do you think that the Fed is most likely to implement the next cut to the funds rate? So when's the cut going to be? This is all over the map on this one. So, 2024 maybe is kind of the most popular one. It's all over the map. And then only 50% say 2025 or later. I think they're probably, if you had to ask me, I think they're probably going to hold, and then, maybe mid next year we'll look at it again, that kind of thing. But I wouldn't be looking for cuts anytime soon, but we'll see. That would be my particular thing. In which range is most likely starting next quarter of the next recession? Okay, so when's the next recession going to happen? This is a big one. 2025 Q1, 43% said that's when it's going to happen. And then you had 25% saying, okay, quarter 1 or quarter 2 of next year, and then 2024, quarter 3, quarter 4. So you guys can always pause the video, but you guys can see the charts for yourself. So it could happen, maybe 2025 or sometime next year. This is kind of the range. It's not going to happen this year, evidently, so that's kind of interesting. So it's been pushed back a bit because there was a lot of concern that maybe it's going on this year. Here's another one. What do you think the peak level of unemployment over the next 3 years will be? So the most popular one is 5% below 5.5, and then you have, and that's 35% of the people said that. And again, we're talking about unemployment, and that's kind of the key number that was mentioned before. Is unemployment going to go above 5% or not? And then you have here, some people say, hey, it could go over 6%. That's 8% people said that. And then you have some more saying, hey, 18% of the people saying it could go at least 5.5 to 6. So I throw this data up here very quickly, go through it, and you can pause the video, look for any of this stuff for yourself and see. And the other things that we're looking for, and I mentioned it before, but the UAW thing is big, because if indeed that they get what they want, and so far that from what I can tell, it looks like the UAW, the auto workers, they've come down a bit and say, hey, before we want a 40% increase in pay, now we want 35. Let's come down a bit. And then I think it was Stellantis that they'll concede and give them a little bit more. So they'll probably meet somewhere in the middle. That I don't foresee that they're going to strike for a year and like that. ultimately, people want to work, and ultimately car companies want to make cars, right? But there is a possibility that this could be really damaging in the sense that the companies are just like, what, we're going to ship in, we're jobs somewhere else because there's cheaper labor. There's a possibility of that. There's also a possibility of a government bailout. I think that would be another certainly possibility where like the government steps in and says, hey, we'll just give you a bunch of money, keep these people working, and we'll continue to follow on this. There's a long discussion on this thing, what's the right choice or not, but it does matter, especially when you talk about the markets and our overall economy of like, how would you pay more workers is a big part of that, right? Sure. This is actually a big part of it as well, is what's going on with loan repayment. So evidently, student loans, that is, have been in pause since like March 2020, and they're going to go on repayment. I think I want to say it's the beginning of October. And it's interesting because I've been tracking this off and on, whenever there's new data that comes out. This is on loan defaults, and evidently, or debt default, you could call it. Credit card default is going up. You guys can see it here. Auto loan default's going up a little bit. But student loans haven't really been defaulting as of late, but we may get a little bit of jump in that. So keep an eye on those things. And the other thing too is that people are concerned about in terms of like spending is if indeed, and you can read the headline of this one, it says what? Student loan restart threatens to pull $100 billion out of the consumers' pockets. If people have to pay back, it was like $200 to $300 a month, which is kind of a standard or average payment, I should say. Will that affect, like, maybe they're not going to go out to movies, maybe they're not going to, buy new clothes, these kind of things that will that hurt retailers, will track. And then this one, which we talk about all the time on this channel, of things that are mentioned in the survey is, I think that the Chinese economic situation is going to affect the whole world, right? Is China making stuff at a reasonable, price? Are their consumers going to be buying stuff that we want to sell them? These kind of things, right? Like, we're all connected. So these are all the stuff that I'm tracking. This was just an interesting survey that I wanted to share with you guys, so you can get a sense of yourself, like kind of what we're looking at, what would be an interesting projection. And for your life, again, and I got to repeat this every video that I make now, and I just want to make sure to reassure you, this is to inform you so that you're prepared, not scared, right? And understand sort of what's going on. Because oftentimes what happens when people get scared is like they just think it's going to be bad times forever, et cetera, et cetera. And when you start to get like some predictions, like, okay, interest rates are really high, it's really crappy if you're in debt, it's really good if you got a lot of cash, right? So the different ways you look at it. But know that things may shift in your direction depending on where you want to go later in the future. But it is a real thing that we've had low interest rates for a really long time, and so you got to change it up a bit, like part of the economic cycle. So anyway, love to hear your thoughts on any one of these stories or data points, and I'll catch you next video.